Hi, I'm Britt Scearce with Emory Federal Credit Union, and I'd like to take a couple of minutes to explain the basic differences between banks and credit unions. Banks are for-profit corporations that accept deposits and create profits by investing that money or loaning it back out to bank customers. Banks are owned by private investors, governed by a board of directors that's chosen by the stockholders of that bank. All activities a bank engages in are expected to show a profit. The more money a bank makes for its investors, the happier they are. Credit unions, on the other hand, are non-for-profit financial cooperatives that also create earnings by accepting deposits from their members and using them to make loans. But deposits are regarded as purchases of shares, so rather than being a customer, you're actually a part owner of a credit union. Instead of returning profits to shareholders, credit unions split their earnings among their members in the form of higher savings rates, lower loan rates on loans, credit cards, and other fees in general. Credit unions are democratically operated by members, allowing account holders an equal say in how the credit union is operated. Regardless of how much money they have invested at the credit union, they have an equal say. As mandated by the Credit Union Membership Access Act of 1998, credit unions cannot serve the general public. Banks, of course, can offer services to anyone who walks through their doors. In order to join a credit union, potential members must be part of a field of membership, which is typically based on your employment, the community that you live in, or membership in an association or organization. There are, however, a number of ways that banks and credit unions are similar. Their deposits, up to $250,000, are insured by one of two federal agencies, the Federal Deposit Insurance Corporation, known as the FDIC, or the National Credit Union Administration, known as the NCUA. It's important to note that not all credit unions offer government-backed insurance, so be sure to verify that your credit union is a member of the NCUA. Banks and credit unions are subject to periodic regulatory and federal insurance examinations. Additionally, credit unions and banks are both required to operate under federal and state charters. Both credit unions and banks are required by federal law to verify the identity of their applicants also. Finally, banks and credit unions alike offer a variety of financial services from checking and savings accounts to consumer and business loans to mortgages and credit cards, and even more. Each organization is different. So that's a general picture of the differences between banks and credit unions. If you have any further questions, visit mycreditunion.gov or helpwithmybank.gov. Thanks for checking in with me. I'm Britt Scearce, wishing you a healthy financial future.